Okay, what's going on? Good evening. This is going to be the trade review for today's position that we took on NQ, right? So we ended up taking M and Q positions. I'm going to go over very quickly our breakdown, what we were anticipating before the New York Open, and then what we ended up getting for the session. So really quickly, when we're on the sessions for the trading floor, right? When we're on the sessions for there, we do break down a top-down analysis of dollar. We like to look at oil, a couple of the Mag 7 stocks, obviously SPY and QQQ. But our main focus is obviously futures indices. So YM, ES, and Q, or your US 30, SPX 500, or your NAS 100. And so that's where our true focus is at. And so what we wanted to see coming out the gate, dollar hasn't been giving us that much other than the fact that it's just been holding this bullish structure. The daily bars have been barcoding, right? I wanted to see if we could potentially reach down into the FEG 98.75, 98.70, and then see if we could continue higher up through 99.50 and maybe back up to psychological level 100. And so we ended up getting that yesterday or Friday. We ended up getting that spike down into the area, and then we've got a positive response coming out of the gate for the New York session and the Monday open here for today. We had a really nice push up, showing signs of strength and seeing if we can hold above 99 throughout the rest of the week is kind of like my idea to see what's going to happen. We have a lot of news coming up. I'm not going to go over fundamentals, just going to kind of stick to what we were looking for this morning. Okay. And then let me see here. And so one of the things I'm going to talk about, which I'll bring up, obviously you'll see um, with a thumbnail, right, is that we're looking for a specific model, right? We play Wyckoff schematics, right? We play supply demand, and we play, lots of things that ICT likes to incorporate. So buy market maker models and specific things like that, okay? And so looking at everything, I wanted to see more upside here. So I did kind of want to see some more sell side on our futures and indices. But based on how the overnight had played out, we had to wait until 7 a.m. to really have our bias. Now, dollar, there wasn't that much to work with. And then when it comes to like US oil, I've talked quite a bit about influencers, right? One of the biggest things that really has been helping me is I like to watch and take screenshots of other people's trades, right? So if they take a trade, like there's a really good influencer who took a trade from the 102s on oil, and when price started to get below these 89s, 88.50s, they started to think about their position, right? They were up $50,000 on the position. Price was coming into the daily and 4-hour demands. We've been talking about these levels quite a bit as acting as levels of like where shorts would cover. And I respect this individual as a trader, right? And know that the position was good enough. And I knew that when that individual was coming on to Instagram saying, hey, I'm going to go ahead and take profit, as soon as that individual said they were taking profit on the position, I kid you not, price legitimate rallied, right? So when you think about where that individual was taking profit from, they were taking shorts from 102 and they were wanting to see price get below that 88.50, right? And as price started to dip below that, and like last week, this was Friday, people were really starting to wonder, like, is it going to continue to break past 87? Is it going to reach down into the 85 demand, right? And a lot of individuals that sold 102 took profit on their position, and we've seen short covering, which pushed price back up into the 93 supply level, okay, today, right? And so that factored into our bias as well, because like I said, in the overnight, because we had seen so much bullish price off the market open for oil, that we could see the high from Thursday be delivered and possibly that high from Tuesday, right, which would have been where they top ticked the area today, right? So like I was also looking at like how they opened last week. They just went down 6% on oil, which was insane, right? Leaving a massive inefficiency, right? Massive FEG of price right here. So like all this is all forming together, okay? And so overnight, what I said coming into it for NQ is if we did deliver and top tick the area here, which would have been these old highs here from last week, then we could anticipate some buyers taking profit here, right? So liquidating some of those orders and sells filling, and then we could anticipate buys starting to fill and overnight shorts on NQ start to work out. So what I mean by that, okay? So now I'll bring this over here really quick. And so what I mean by that is like when I'm watching oil on the overnight, right? And what I'm seeing here is on the overnight for this would be not oil. So let me bring actually the oil one over. Sorry, but that was NQ and oil. So this would be NQ and oil. Okay. And so when you're looking at, like I said, there's that price we were looking to be delivered on US oil. Now, what I'm saying is here is the overnight on NQ, right, starts here and then falls off into the demand zones that we were looking for on a higher time frame. Now, the start of oil here on the left, right, starts to pop up and coming into New York, right, before it pops up. So what I'm essentially saying in the functionality of trading is what's happening is the individuals who shorted London Open, right? Because it's just 2 a.m. They would just put their stop at the old highs and watch price go back down. And we're looking probably for like 30,250s to deliver. Now, what I'm saying is when these individuals realize they're not getting past this level here and price is going to be halting, right? What they're doing essentially is they're short covering, right? So when they want to get out of this position, when they want to take profit, they essentially are pressing the buy button or they're setting limits to old lows to deliver as a take profit, right? And so for us, that's like a beautiful type of play for me, right? When you're looking at a buy maker model, right? Because essentially what you're seeing is you have that overnight player with all their stop losses built up in this area, and it's an alignment also with all-time highs, and then price rolls over into the perfect area for us for that New York Open. So that was perfect, right? And then looking at oil at the same time. Okay, and so now, there's the other couple keys that were really key factors. Okay, so before the New York Open even happened, we were inside this zone here, which was an H1 demand, right? Price was failing to break lower. We had already closed price higher and then overnight, and price was coming down into potentially this area. Now, everything's fractal for me. So not only was I looking at that 1 hour zone, which would have been this candle here, right, from Friday, the 1 p.m. to 2 candle. So like this candle, right, or excuse me, the 12 to 1 p.m. candle from Friday. And then now the other candle I'm looking at as well, because how price was starting to close higher, was this 4 hour demand here on the left, right? So 4 hour demand and 1 hour demand was being respected. Overnight shorts were in a profit. The only way for them to make money is for them to press the buy button, okay? And so that's why we anticipated short covering in the area and started looking for buys on the way up. And then when you go into, let's go to 15.5 here. Now, I want to talk about the first wave up, and then the second wave, which is the bullish mitigation that we like to play and what I teach on and inside the Discord. Okay, and so when you go and you look at that first move, right, and you're studying the opening range, right, the orb, right, opening range break, you can see that what was really interesting on that first run up, right, on that first 5 minute run up was if I like I said, if you go in the Discord and you look, I was like, yeah, I would love to take a position here right when we opened, right, because I wanted to attack those all time highs from the beginning, but I just didn't want to play in the first 15 to 5 minutes of the open, but luckily that this played out for us. An individual actually inside the Discord crushed it. He was able to buy below New York Open inside the 5 minute demand with a 20 handle risk, looking for a 1 to 3, 1 to 5 risk reward going back into that 5 minute supply and that 15 minute supply zone, right? Which would have been this candle here, 7:30 going into 7:45. So we were explaining, and I've talked a lot about this. Is like on that first run up on a 15 5 minute move, like this is the first run up, a lot of times this isn't the move that's going to continue through the target, right? What they're going to do is they're going to, individuals who aren't given the trade where we give it out, right, below New York Open and inside the demand, most likely they're taking the trade a little bit later, right, inside the 5 minute area and getting trapped inside of the supply zone, okay? And so it's better to be patient, wait on the timing that I give inside the Discord, which we end up waiting for our favorite time, which we've taken our last 7 trades at the same exact time, which is 9:05 to 9:10. We ended up taking that trade as the individuals were not getting the push through. So essentially, when we frame this up, we look for 1 to 3, 1 to 5. So the individual inside the chat, he definitely was able to clear his 3R position as that price started to push away. If you framed it up the right way and based on your entry, you could possibly even push out a 5R setup. So 60 or 100 plus points in that setup there. Now, when you're not getting the structure break higher, right? So essentially what I mean by this is like when that price goes like this, if it's not breaking and starting to go higher and starting to clear these areas like this and this, then essentially, right, what's happening is that's not the move. That's the first move, right? And so we knew that was starting to happen. and we could start to anticipate that was starting to happen just because, like I said, he started taking profit, and then it started to reject inside the FEG, inside the supply candle 15.5 at the 450 level. And then we start to slowly correct back into our favorite time, right? We've been taking our best trades around 9 a.m., 9:05 to 9:10. So 9 a.m. right here, this was 9 a.m. to 9:05. Price was kind of being manipulative. And then 9:05 to 9:10 is when that price started to show that sign of strength. And if you go back and you study on a 1 minute time frame, right? So 5 and a 1 minute time frame. Let's see, I'm not do this right now. If you go back and study this on a 5 and 1 minute time frame, what they do when I say noobs buy tops and sell bottoms is once you know where you're actually at on a higher time frame, what's happening to people is they're just trying to play every move, and they're on the 5 and the 1 minute, 30-second time frames. So when they see the move breaking down in here, they start to sell, right? And they want to see that push on through. Now, most people only start to play when it looks obvious and it looks like they can clearly get it. And so a lot of times what you're starting to see is people will miss that buy up, and then they try to take this short here instead of anticipating, point of interest and like stuff that we look for, and price starts to break back down and they start to short that position, and that's where they get trapped inside the mitigation position. Okay. And so for me, like I said, looked at that 9:10, and I started to watch as, like I said, as they start to push down to that price, and then news will start to just try to press sell. So essentially what I'm saying is, like, they'll start to come in here and they'll look at a candle like this and they'll say, oh, I'm going to sell this to the downside, right? And they're looking like right here at this point, pretty much. Right, this is when it would be happening, and then they would be trying to sell this down through the low of day to get a continuation trade just to take those lows. But because they don't know what supply and demand is or how to identify it, that's why they get trapped selling a move like this and being backwards on the trade. Okay, so if that's ever happened to you, then definitely keep your eyes open on this part. Okay, so 5 minute plays work out really well. 5 minute demand was really starting to set, and then we got the turnaround candle here. This is 9:04 and 9:05. Then 9:05 to 9:06, we got that little shift in price delivery inside that zone. So as you guys can see here, on that 1 minute, you actually had the candle close higher. And then from there, it was definitely pretty good strikes from anywhere around that area. Now, me personally, I started to personally strike this on my entry was inside those 913s, right? So where I actually gave out the entry was in the 913s, and then I started, saying anything below New York Open, you have a pretty good shot at having a pretty good setup, okay? So the order that I gave out, I'm just going to show mine here, right, was right here in those 913s, okay? So 913s were really good. Was able to get inside that 5 minute demand candle below New York Open, 20 handle risk, right? The 3R had already delivered. I believe I had 4 contracts on this to start, and then the 3R, the 60-point move, had already hit. So 20 handle risk though, nice. 313s was the entry, 293s was the risk, and then we were just looking for that New York high to deliver, and possibly these 30,550. So really, really beautiful trade, and was able to give that out to the group, and some individuals were able to take that for a beautiful move to the upside. Now, me personally, I was just looking for the New York high. Now, something I always like to target is going to be New York highs or New York lows. So as price starts to push away, right? New York high was here inside these 30,000 470s, 468s, right? And so all I really wanted on that second move, where we ended up taking those buys where I just showed, right, was a push back up through this liquidity here. Okay. And so TP was delivered. Now we're looking for 5R plus multiple trades. Now, so when I took this here, I was looking at it from this perspective here. Okay, like I wanted at least obviously a 1 to 3, right? 3 times my risk, right? And then this was another trade where I was looking for the same trade, but just looking at like how it was working. And then to deliver through, if you can see through our target, right, that would have gave us at least about an 8R trade. If you only had half volume, you're still looking at least 4R on the trade, which is really good. Anything above 3R, and you're going to be pretty profitable if you're always 3xing or 4xing or 5xing, whatever you're personally risking, you're going to be in good hands. Okay. Now, from a perspective of just understanding overnight and just how this probably created a lot of FOMO, I was anticipating that most people started to short NQ in this area here. And so now once we delivered the New York high, I could easily see them getting back above this area. And that's what we ended up doing, 1030 to 1045. Massive liquidation through that level to go fill FEG at the 30,550 level. And then we've seen a little bit of profit taking, and then going into 11:15 to 1 o'clock, we ended up seeing a massive push up to make all-time highs and almost push 30,700. So beautiful position, right? Beautiful mitigation. You don't always have to be on that first move, right? That first move can be kind of, you have to manage it a specific way. You have to be knowing that in that first 15 minutes of the opening range, you need to get your bag and be able to partial. Because there's a couple ways you can work this, right? You essentially could be working it from, like, I look at it from what's called the right side of the V, right? So expected value. So like no matter what, essentially my good friend took the trade inside the 20 level, 318s, 320s, right? And this was entry A, but entry B was a little bit better just because of the fact of the timing and because of the context of the marketplace of what was going on, okay, and how people would have, probably played this late, and they would have been trying to sell this as it rolls over, and just all kinds of stuff where they just joystick about this area, okay. And so one of the things I want to show here as well is something we always talk about. Let's see here if I have it. I don't know if I have it exactly here. So cool. So yeah, bullish pattern that we were looking for. We seen the buy inside the zone that we wanted to see. We ended up seeing definitely over a 5R. And if you ended up doing full volume, which there was someone that had a full volume that we were looking for, 20 handle risk going for 200 points is going to be a 10R. And so getting to that target that I wanted, right, which was 30,550s, you're definitely looking at over a 10R trade, even if you have volumed on the trade left. Half of 10 would be 5, so you're looking at a 5R plus trade based on the system. I mean, even that is an $800+ day on just one account. Okay, so that's a banger day. So beautiful buy positions today. Like I said, I do not have exactly the document that I was looking for. Let me look one more time. So I could have swore I had the document right here. Oh yeah, no, I do. Okay. So this is the document that I'm pretty much working and talking about, which is going to be the one from the thumbnail. So let's see if I have that here able to show. Okay. And so what you're seeing here, let me make sure I have OBS pulled up. So I can't see that all the way. Okay, cool. Okay, so what you're seeing here, guys, right, is the long positions that we took at 905 to 910. We have a 20-point risk from the 320s, right? Now, this is the market maker model that I basically teach off of, and understanding where you see that consolidation, equal highs or equal lows, right? That's that overnight all-time high that you're seeing right there, okay? And so what we're wanting to do, and what I'm teaching you guys to see, is the seeking liquidity zone, what to look for. Now, like I said, the right side of the V, the same price at different times can yield different expected value. What that means by this, right? Like this little piece right here, I'm gonna make sure I'm taking a picture of this for my contacts later on as well, right? And you guys can do that as well. But what that essentially means, right, is when you look at it from this perspective, I'm trying to see if they let me do it this way here really quick. They let me copy and paste it into something like this. No, it doesn't let me do it that way, like an image. But essentially, like I was saying here, I can pull the screenshot up, I believe. But basically what that's saying here is that first entry and that first run up is basically option A, right? And what it's saying is it doesn't yield the same expected value because of the timing, like I talked about, and because of the context. So this is the same price you're taking it area A, but you're just not getting the same expected value because it's the first run up. But because, right, you're taking that B area, and that area happens to be at a date of time that we've obviously seen a lot of confluence, and we've seen like what the context was of coming back down and seeing how people are going to start trying to short dishes to take the lows, right? And the shorts were up a bag from all the way up in the 30,560s. They're going to cover inside this zone, and we're going to see that type of rapid move up. Okay. And so beautiful position today. Going to drop this on YouTube and then talk about more oil and stuff tomorrow when we come on. Now, going into tomorrow, we are starting to see that the buy positions that we took today, it took all-time highs. We could see the overnight price roll over back into the 30,150s, maybe 30,100s. and maybe even lower into your 4-hour zone, right? Like this is what I'm really anticipating when it comes to NQ, is to pull back into these 30,000 100s and back into this 4-hour demand zone and see if we can get there by tomorrow morning and see if we can get a reaccumulation buy, or if we're going to start to break down. Okay, so beautiful buy positions, easy way to attack the all-time highs, and then it was an easy buy maker model, seeking liquidity and respect 4-hour and H1 demand. Okay, so appreciate you guys watching, and then I will be back for another daily recap of the positions that we take inside the Discord tomorrow. So talk to you guys later. Have a good one.